People just assume that they can make bids on properties without any worries because your interest is mandated by law, or you obtain the property after the redemption period has passed. However, you do not want to end up with a worthless property. There are over 5,000 taxing municipalities, and it is important you research each one before making an investment. Many first-time investors only research enough properties that cover their investment capital. They have, let's say, $5,000 to invest. So they find a total of 10 tax liens that they will invest in for a total of $5,000. The issue with this is that you will not win every bid you make. Instead, you need to take the time to research out all great investments on the list and bid on them all. You can only win the amount of properties based on your deposit. So if you can only win 10 times your deposit in most cases, it does not matter if you win more than what you deposit. The auction will not allow you to win more than the deposit allows, but check bidding rules for each auction, because that may not be the case. At live auctions, bidders sometimes get caught up in the moment and pay more for a tax lien or deed than they should have. On each property, you should have a max bid for each property, and you should not bid any more than that number. The neighborhood is just as important as the property, if not more important. The land in a nice neighborhood is more valuable than a nice property in a bad neighborhood. Just think when you purchase a home to live in. First, you usually choose which area or neighborhood you want to live in, and then you start looking at properties. This should not change when making investments into tax liens or deeds. Some new investors will assume that it must be a good investment if others are also bidding on the property. Do not fall for this mistake. Maybe those investors are also first-time or inexperienced investors. Do not cut corners, or you could end up with a bad investment, leading to loss of investment capital. Municipal fines, condemnation, and demolition. This is my absolute nemesis. As a tax lien investor, you have little or no control of what your friendly code enforcement officer will decide to do to that land parcel or building you have a tax lien on. And do not expect the owner of the property to take care of any issues. With municipalities strapped for cash these days, it is not unheard of to have $500 in fines each time the city comes out to cut the grass on a small parcel. To make matters worse, the federal government is giving out grants for cities to demolish whole blocks of older properties. What you thought was a nice older property to have a tax lien on could be on the condemnation list and demolished in less than a year. And you have very few remedies to stop it. Being organized is the key to any business, but it is extremely important in tax lien investing because there are important timelines you must follow. Deposits must be made, bids, registrations, notifications of foreclosures, etc. Each county is different, so it is vital to keep a calendar of dates and notes for each county. In your next training video, we will cover actual tax lien case studies which you do not want to miss out on. If you want to learn even more about common mistakes beginning investors make, we encourage you to sign up for our free online training webinar so you can get started making big money with tax lien certificates. So if you're ready to take the next step with us and you're ready to start safely making big money with tax lien certificates, then sign up now.